the subject of personal financial planning, we are having lecture series on insurance planning. As I've been saying, that insurance is an integral part of any financial planning, especially the personal financial planning. So in my previous lecture on the insurance planning, we talked about means risk management, elimination of risk, avoidance of risk. We discussed the concept of risk, and we also referred that how insurance policies, how insurance companies do work. Basically, there is two parties, the insurers and the insured. Insurer is the one who gives the insurance, and insured is the one who gets the insurance. So in the insurance, it is a contract between the two parties, that is the insured and the insurer, and a policy is being taken by the insured, that is the person who is getting the insurance, and the policy is being given by the insurer. That is, under a policy, terms and conditions are being laid down, then on what basis the insurance policy has been taken. And the policy holders, the person who takes the insurance, gives a small premium amount to the insurance company for getting this insurance policy, and if any loss arises, that if any event or unforeseen event happens which is being covered by the insurance policy, then the loss is being compensated by the insurance company to the extent of the policy amount of the insurance. Right? So insurance is a tool by which you can protect yourself and your loved ones from facing a financial crisis. An individual buys an insurance policy for the same, while the insurance company takes the risk involved and offers insurance cover at a specific premium. So what is the role of the insurance company? It takes the risk involved and offers a amount which is to the extent of the insurance policy amount, right? And it covers, it takes its charges. What the insurance company gets, it charges a particular premium or specific premium. So in case of any accident, the insured or nominee can file a claim with the insurer, with the company which is giving the insurance. So the insurer reviews the claim application and settles the claim. Means we'll have to see that what is the cause of the loss. We call it principle of causa proxima. We have to see what is the main cause of this loss or the accident or whatever the policy amount is, or whatever the terms and condition is. We have to see why this loss has taken place. If that reason of that accident, reason of the loss is being covered by the insurance policy, then the claim will be settled by the insurance company. So why the insurance is required? The question is, what is the need of insurance, right? Why we need protection planning? So if you are not sure whether insurance is fit for you, here are some of the reasons why investing in a good policy will help you with all your needs. Means most of us think that for me insurance is not required. Why should I pay a premium amount annually? And suppose you are getting your house insured for against the fire. You are living in the house for the last 10, 15, 20, 30 years, and you find that never fire has taken place in your home. But think of a situation if fire took place at your home, or fire takes place at your home, and everything is being destroyed in that fire. You lost your property, you lost your belongingness, you lost the cash which you hold in the home, at your house, you lost various important belongings which you hold, you hold precious assets which you hold at home, and that is being lost in that fire. Then how much trouble you will have to face. Or think of a situation that if theft takes place at home, right? You think, in my house, how the theft can take place? It is a well-protected building. It's a place where in every home, every day, the theft doesn't take place. But if at all, in lakhs of home, in one home, the theft takes place, and if the theft takes place, all your precious belongings are taken by the thieves, then you will be having a deep financial losses, right? So for that purpose, what you do is take an insurance policy, pay a small amount, right? And you can have a relaxation, that at least if something happens, insurance company is there to help you. Means it is a division of law, division of the risk, division of loss. That is, I'll come to that point. Now let me come to what are the benefits, why you need protection planning. Means when you say, most of us, that is the reason in India the insurance is not largely penetrated. Hardly 4.1% of the population is covered by the insurance, right? So there is a greater need of insurance penetration in this country. So why, the question is, why the protection planning is required? You may say it is required for achieve retirement goals. See, if you are buying an insurance policy of your life, and policies are of such nature that supposing a person in the age of 25 takes an insurance policy for the 60 years. If anything happens in between the period, that is from 25 to 60 years to that individual, then the policy amount, the whole policy amount will be given by the insurance company to the nominee of that person without paying the further premium, future premiums. Suppose that person pays premium for 5 years and in the age of 30 a car accident takes place or a bike accident takes place and that person dies, right? So the insurance premium that is being paid by the person is only for 5 years and the insurance policy is for up to the 60 years, right? So he was supposed to pay insurance premium for 35 years, but that person dies in the age of 30. So in the 30 itself, if the policy amount is of 1 crore rupees, the person will get 1 crore rupees. If nothing happens to the person up to the age of 60, then this 1 crore rupees will be given by the insurance company to that individual, 1 crore rupees plus bonus as per the terms and condition of the policy to the person or to the person concerned, right? So in the age of 60, when the person is getting retired, he will get a lump sum money of say 1 crore rupees if the policy amount is of 1 crore rupees. So with this 1 crore rupees, you can fulfill your retirement goals. You want to go for a foreign trip, you want to have a leisurely life, because then at that time, if you're not getting the pension, your job is not pensionable, then you want to have a leisure life without any thinking of any financial issues involved in the life, right? So that you can have a same standard of life which you were earlier spending. So you can achieve your retirement goals if you take the right policy, you take the right insurance policy. Right? So insurance policy helps you in achieving the retirement goals. So insurance plans like guaranteed saving plans, ULIP plans are some of the good retirement saving options available. Means for saving purposes, it serves two purposes. It will help you in saving also, plus the life protection is there. So anything happens, then your dependent children, your spouse can get a lump sum money. So you can also use deferred annuity plans to safeguard your post-retirement income when you are close to retirement. Means the nutshell, what it means is that there are certain insurance policies which caters the need after the retirement, right? So the good thing about the insurance policies, you can achieve your retirement goals. Stress-free life. When you say stress-free life, it means that many times we think that if suppose any serious ailment takes place, any accident takes place to the individual or to his or her family members, and the medical expenses these days are very expensive, medical hospitalization is very expensive, the medicines are expensive. For that you will have to pay very heavy amount. How you will be able to meet out? And if anything happens to the health of the person, he will not be in a position to do the job. Suppose any serious ailment, disease takes place of cancer, failure of kidney or like that. So when person is not in a position to go to perform his regular duty or a regular duty and has to take holiday, means leave from the office, going to the hospitals on a daily basis, incurring heavy expenses on the medical. So you are always stressful that if something happens of this nature to any individual, what will happen to the life? But if you take the right policy, if you take the insurance policy, at least you are sure that in case any serious ailment takes place or any ailment, any hospitalization takes place, you can meet out the expenses of the hospital by your insurance policy. So you are stress free, at least financially. I am not saying stress free in every sense, but at least financially, that if any sudden medical expenses arises or of anything for which you have got the insurance policy, you are not too much worried about the financial loss that will take place. As I was saying just now, that if suppose a fire takes place at home, right, and all your important and the precious belongings lost in the fire, so at least you are stress free. If at all fire takes place, insurance company will take care of the financial needs. Means to the amount of the insurance policy company will fulfill that financial loss that will take place because of the fire. So with the right insurance plan, you can remain stress free from unforeseen risk causing many major financial damages. Insurance will help you and your families bounce back to a normal financial life quickly after the mishap. Insurance also keeps your long-term investment safe from sudden financial shocks caused by emergencies. Because had the person not been insured and a serious ailment takes place, so all your past savings will be utilized for meeting out the medical expenses. But if you have taken a proper medical insurance, the insurance company will take care of your medical expenses that you have incurred. So in that way, you have a stress-free life. Save taxes. See, in India, in order to promote insurance, in order to promote health insurance, in order to promote life insurance, when I am using the word in order to promote, it means people are being motivated to get life insurance. People are being motivated to get health insurance, because if anything happens, then it will the government knows it, that the individuals will have to incur heavy expenses. Either they will meet out from their own expenses, which will create a financial burden, or there will be stress on the private hospitals or the government hospitals if they are not able to meet out your own expenses. So government wants that more and more people should opt for the health insurance. More and more people should opt for the life insurance. So Government of India is giving tax concessions if one takes the health insurance, if one takes the life insurance. Government of India gives tax deductions. The premium which you pay up to a particular amount, the tax deduction is being given to the individuals for taking the life policy, for taking the health insurance policy. Means you must have heard Section 80C, which is a very famous section of Indian Income Tax Act, right? So what does it? Section 80C says that if you take a life insurance policy and you pay premium, then from your income up to 1.5 lakh rupees can be deducted under Section 80C. Means that if supposing you pay a life insurance premium of an annual life insurance premium up to the extent of 1.5 lakh rupees, right? So under Section 80C, this 1.5 lakh rupees can be deducted out of your total income, and then your taxable liability will be calculated. Or if you take a health insurance policy up to a particular amount under Section 80D, this health insurance premium which you pay annually to yourself, for yourself or your parents, right? Then again the deduction is being given up to a particular amount, right? So this way, by getting a insurance policy, you can save tax also. Helps your family pay off obligation. This I have been telling you whenever we are talking of the insurance, that if anything happens, then your family can meet out the financial obligations. So we never know what life has in store for us. Life is the most uncertain thing that is there in this world. If anything were to happen to you, to your family, you may have to deal with a car loan. Means then after the family members will have to deal with the car loan which the person has taken for buying a car. You have to deal with the credit card bill, or other type of loans. Means if anything happens to him, when I am saying anything happens, means if a person dies, a person may be living with various type of obligations. It may be in form of EMIs, of car loan, house loan, right, credit card bills, or many other types of loan which that individual has taken. How you will able to meet out those repayments, those loans, the payments of against these loans. If you have taken a proper insurance policy, you can meet out these expenses which comes in a way, right? So when you are saying you, means your family members. So the payout from a life insurance policy can help your loved ones to repay these debts. So this is another advantage why the insurance policy is required. I'll say to pay off the obligation, financial obligations, if that person, if something happens to that individual. And one more important thing is, in these insurance policies are not very expensive, not too expensive. You have to pay a small premium, and for that, by paying an insurance policy, by paying the small premium, you can protect a large sum of money. You can protect, you can buy the insurance of a large amount, right? Because as I said in the beginning, how insurance policy works, they collect the small amount of premium from different individuals, and then on the basis of probability, the probability of having that loss, right, is 1%, hardly 1%, less than 1%. So it is being dispersed. It is a division of loss, right? So the earlier you start your insurance policy, the more it will benefit you. As a young individual who is in great health, your premium are like to be lower, while the insurance cover will be higher. Here I am talking of the health insurance. That if you have taken a health insurance, that anything happens, it is being presumed, and it is fact also, that it is being presumed, expected, or probability of getting a serious ailment or ailment in a young individual is less as compared to a old person. So if you get a health insurance policy in your young age, say a person of 25 years, 15 years, 10 years, 12 years, in that age the probability of getting a ailment or hospitalization is less as compared to an old man. So the insurance company charges a small premium for young persons, or they charge the high premium from an old person. So if a person gets health insurance policy in a young age itself, the premium amount will be very small, right? And this will carry on, means the amount will not remain same. Over a period of time it will increase, but the percentage increase will be certainly less if you have taken an insurance policy at a young age, right? So in the young age, that the insurance premium is small, and you can have easily of a good amount of insurance cover. So what it means is that buying a policy or taking a policy, any policy, not only health policy, but even life policy, or even fire policy, insurance policy, fire insurance, theft insurance, right, motor insurance, that not very expensive. You buy a car of 15 lakh rupees or 20 lakh rupees just by paying 20,000 rupees. You are stress free that if anything happens to the car, right, any accident takes place, or if the car is being theft take place, of any theft take place, at least the insurance company will take care of the financial loss that will come because of that accident or because of that theft. Option to customize available. The question is, why you buy the insurance policy? You can buy the insurance policy as per your own requirement, customize as per my requirement, right? So there are a whole host of financial insurance products which caters the need of the individuals as per the individual requirement. Say for example, if an individual, a professional, highly educated, good skilled professional, right, having very good salary amount, and especially in the private sector, when the industry, there are economic recessions, there are good period in the industry, there are bad period in the industry, and when there is a bad period in the industry, there are retrenchments that take place by the companies, right? So people who are working in the private sector, they can face a time being retrenchment or the unemployment for a period of time. The period for which they remain unemployed, right, they will not having a regular income. For that period for which they remain unemployed, they can buy an insurance policy that if anything happens to their job because without fault of theirs, right, they remain unemployed for a particular period of time, depending on the terms and condition of the policy, for 6 months or for a year or for 3 months. For that period, the insurance company will pay you the amount you was earning while you was in the job, right? Means depending on the policy amount you have taken, the insurance company will take care that in case that because of the policies of the company any retrenchment takes place, or because of any reason you become unemployment, or because of your personal accident you are not in a position to work, right? So in that case also the insurance company will pay you. What I am trying to say by this is that you can buy an insurance policy as per your own requirement, as per the customized available. So there are whole host of the insurance product, insurance policies that take care of the requirement of the individuals. So depending on the kind of provider and policy you choose, you may be able to customize your plan to include any personal health problem or major illness. This offers you and your family greater protection. Serves as a saving tool. As I was saying when I was talking of why insurance policy, why the insurance policy is required, first I said retirement planning. Similarly, I can say that it acts as a saving tool. That when you buy an insurance policy every year, every quarter, depending on what your payment terms are, you have to pay a sum of money. And that sum of money acts as your savings. Suppose you are buying a life insurance policy. In that case, whatever the policy you are paying, you are having, you will every year you will have to pay a small amount as a premium. And this small amount will keep on accumulating over a period of time. Suppose nothing happens to your life. In that case, after a period for which you have taken the policy, the insurance company will pay you amount. So it acts like your piggy bank. It acts like your bank, right? Every year you are depositing the money. This money is being deposited with the insurance company. Insurance company is further reinvesting this money or investing this money and earns income on it, and this money keeps on accumulating. So the insurance company distribute this profit in form of bonus, right? So when you buy a life insurance policy, the insurance companies distribute a particular portion in form of bonus to the policy holders. So it acts like your bank, or you can say piggy bank. So apart from keeping a part of your salary safe, many policies will also allow you to borrow money against your insurance, which can help at times when you need to liquidate assets. It not only serves as a saving tool, but if you need money for a particular period of time or for some time, right? So you can take loan also against your policy. That is, supposing a person has taken a policy of say 5 crore rupees, or let me just take a small amount of 50 lakh rupees, right? And he has been paying policy amount or the premium for the last 20 years, right? He has taken a policy in the age of 25. Now after 20 years, in the age of 45, he needs some money. So insurance company, there are certain ways in which they calculate to what extent the loan can be given to the individual. So you have paid premium for 20 years, right? And there are certain accumulated value of your policy. So on the basis of accumulated value, the insurance company will give you a proportion of it as form of loan which you can repay, right? So it acts not only as a saving, but it can also help in form of taking loan at a particular period of time. It provides a financial stability. See, financial safety net. Financial stability and financial safety net, what does it mean? Your loss will not only hurt your family emotionally, but also financially. If you suppose to be in the sole earning member of your family, having a good life cover will help your family through the period of grief, right? Means we say we must have any good financial planning must have a financial safety net, that if anything happens, how we will able to meet out. When I'm saying we, means not only of myself but of my family also, not only of yourself but of your family also. So how you will able to meet out your family expenses? If you have taken a proper policy, it will take as a safety net to that individual and the individual's family, right? Because if anything happens to that person in form of life, in form of accident, or in form of health, means any ailment, right? So in that case, the insurance company will take as a safety net. It will take care of the expenses which will have to bear for the medical expenses, or in case of the life insurance policy, in case anything happens to that individual. So these insurance companies will give the money, and thereby the family can meet out the expenses, right? So in this way we can say that there are various benefits, or there are various advantages because of which you must buy a right insurance policy depending on your requirement, because this insurance will work as a safety net for you. You will have a stress-free life. You can have savings, means it acts as a saving, it acts as a bank. In need of money, you can even take loan against your policies, right? It can work as a retirement planning. So there are many benefits of the taking a right insurance policy, and any good financial planning must involve the proper insurance. What should be the proper insurance amount? That is also a question which we will discuss in our next lecture, means next discussion on the insurance in the financial planning. Thank you very much.